Jagsonpal makes a big bet. Enters fast-growing hospital pharma market. Jagsonpal Pharmaceuticals has announced a strategic acquisition that could significantly reshape its future growth strategy. The company has signed a definitive agreement to acquire an 85% equity stake in Mumbai-based Aequitas Healthcare, marking Jagsonpal's formal entry into India's rapidly expanding hospital pharmaceutical segment. Unlike a routine acquisition, this transaction represents a structural shift in Jagsonpal's business model. The company has traditionally been known for its strong presence in the retail prescription pharmaceutical market, but this acquisition opens the door to institutional healthcare and hospital-based medicine distribution. The acquisition values the 85% stake at 20.8 crore rupees, with Jagsonpal funding the entire transaction through its internal accruals. Since no external borrowing has been announced, the deal avoids additional debt while demonstrating the company's financial strength and confidence in its long-term strategy. Aequitas Healthcare was established in 2017 and has built a strong presence in supplying pharmaceutical products to hospitals across India. Despite being only 8 years old, the company has successfully established relationships with several leading hospital chains and generated revenues of approximately 53 crore rupees during FY26. An important aspect of the transaction is that the existing promoters of Aequitas are not making a complete exit. The current directors will continue to retain a 15% ownership stake and remain actively associated with the business after the acquisition. For investors, promoter continuity is often viewed as a positive development because it ensures that the existing management team remains committed to business growth. Their continued involvement also helps preserve institutional relationships that have been built over several years. One of the biggest strategic reasons behind the acquisition is the growing importance of the hospital pharmaceutical market in India. According to Jagsonpal, hospital sales now contribute nearly 10% of the country's pharmaceutical industry and are growing at a faster pace than the broader market. Healthcare delivery in India has been changing rapidly over the last decade. Rising insurance penetration, increasing healthcare awareness, expansion of corporate hospital networks, and growth in specialty treatments have significantly increased medicine consumption through hospitals rather than traditional retail pharmacies. By entering this segment, Jagsonpal is diversifying its revenue streams while gaining access to a market that offers long-term structural growth opportunities. Institutional sales also tend to create stronger customer relationships through long-term supply agreements with hospitals. The company believes that its portfolio of established pharmaceutical brands can now leverage aequitas' extensive institutional network. This creates opportunities for cross-selling products and increasing market penetration without building a hospital distribution business from scratch. Management has described the acquisition as an important strategic milestone rather than simply adding incremental revenue. The company views the transaction as the foundation for building a meaningful presence in institutional healthcare over the coming years. Jagsonpal's chief operating officer went even further by describing the deal as a transformative pivot. According to management, the acquisition helps transition Jagsonpal from being primarily a retail prescription-focused company into an omni-channel specialty healthcare business. The concept of omni-channel healthcare is becoming increasingly important in the pharmaceutical industry. Instead of depending on a single distribution channel, companies aim to serve patients through retail pharmacies, hospitals, specialty clinics, and digital healthcare platforms simultaneously. This diversified approach not only expands revenue opportunities but also reduces dependence on any one segment of the healthcare market. As patient treatment pathways evolve, companies with broader distribution capabilities are generally better positioned to capture future growth. For aequitas, the partnership also creates new opportunities. The company gains access to Jagsonpal's established pharmaceutical portfolio, stronger financial backing, and wider industry experience while continuing to operate with its existing leadership team. Management at aequitas believes the partnership will accelerate the company's next phase of growth by combining its institutional relationships with Jagsonpal's expertise in building healthcare brands. Such synergies often become one of the primary objectives behind strategic acquisitions. Another positive feature of the transaction is its relatively modest acquisition cost. Purchasing an established business with 53 crore rupee of annual revenue for a consideration of 20.8 crore rupees appears financially manageable, although the ultimate value will depend on future profitability and growth. Since the acquisition will be funded through internal resources, Jagsonpal also avoids increasing financial leverage. Maintaining a healthy balance sheet provides greater flexibility for future investments and reduces financial risk during periods of market uncertainty. The broader Indian pharmaceutical sector continues benefiting from favorable long-term trends including increasing healthcare expenditure, expanding hospital infrastructure, rising chronic disease prevalence and greater access to healthcare services across urban and rural markets. Hospital-based pharmaceutical sales are expected to remain one of the fastest-growing segments as more complex treatments shift toward institutional care. This structural trend supports Jagsonpal's decision to establish an early and meaningful presence in this market. Investors should remember that acquisitions create value only when integration is executed successfully. Preserving customer relationships, maintaining service quality and generating commercial synergies will determine whether the expected benefits ultimately materialize. The transaction remains subject to customary closing conditions and is expected to be completed by July 15, 2026. Following completion, investors will closely monitor how quickly Jagsonpal integrates the business and begins leveraging aequitas hospital network to expand its own pharmaceutical portfolio. Overall, this acquisition represents far more than a simple addition to Jagsonpal's revenue. It signals the company's ambition to evolve into a broader healthcare platform with exposure to both retail prescription medicines and institutional hospital business. If management executes its integration strategy effectively, the transaction could become an important long-term growth driver for the company.